Hi everyone, this is Stephen. Welcome back to our second lecture in Module 3 on wedges, triangles, and pennants. Three patterns that are similar. Sometimes they are continuation patterns, and sometimes reversal patterns. So wedges, triangles, and pennants are patterns in which a stock price is being compressed. A wedge is a reversal pattern. A rising wedge has higher highs and higher lows and is bearish. A falling wedge has lower highs and lower lows and is bullish. A triangle pattern can be either bullish or bearish. A symmetrical triangle is neutral in that the direction of the break is not determined until the stock moves in the particular direction out of the triangle in which the trader would want to trade. An ascending triangle is bullish. It has higher lows and flat highs. A descending triangle has lower highs and flat lows and is bearish. And in each of the triangle patterns, we're looking for a break out of the triangle to give us the direction to trade. Finally, a pennant is a price compression continuation pattern following a sharp rise in price. This is often also called a flag pattern, and the sharp rise in price is called the flagpole. Now let's look at a couple of charts to give a few examples of these patterns. Here we have a daily chart of Bank of America, and here we have a falling wedge. As you can see, the stock is making lower highs and lower lows, and when the stock breaks above this falling wedge pattern, it moves to the upside. So again, a falling wedge is a bullish pattern. When the stock breaks above the upper bound of the wedge, that is a buy signal. Here on a daily chart of Raytheon, we have an ascending triangle. We have a resistance level here. You see that we're making higher lows. And then when the stock breaks through the upper level of the ascending triangle, you get a sharp move to the upside. Now let's take a look at a daily chart of Hertz. As you'll see, the stock has been trending down, and then we get a sharp upturn in price, and then we have a pennant pattern. We have a couple of days of the stock trading sideways to slightly down, and then when it breaks the pennant pattern, it continues back to the upside again. Let's look at one more pennant pattern in lumber liquidators. As you can see, we have a very sharp rise in price, and then the stock trends down in this short pennant pattern. And as it breaks the pattern, it breaks back up to the upside again. So the pennant pattern is a continuation pattern. This is the flagpole, as this is also called a flag. So the rise in price is the flagpole, and the continuation is to the upside as it breaks above the upper bound of the pennant or flag. Finally, let's look at a descending triangle in Dollar Tree. We're looking at a daily chart, and we see a support level here at around $48. And then we see the descending triangle pattern. And as the stock breaks through the support level, we see this bearish pattern take place. So each time the stock moves up in this triangle, you get little up moves, but it gets lower and lower. So the buyers here are getting more worried. And finally, when the stock breaks through, you get a quick move to the downside. And that's the descending triangle pattern. So that's a couple of examples of triangles, wedges, and pennants, and what those continuation and reversal patterns look like. In our next video, we're going to talk about double tops and double bottoms and how to trade these patterns. I look forward to seeing you in the next video.